Okay, good morning, everybody. Thank you for joining us for this week's In the Trenches. I'm Craig Nazzaro, not Brad Rustin. This week, Brad is attending to a client obligation that couldn't be moved, but don't worry, he'll be back with us to cover the next session of In the Trenches on September 10th. We do have the pleasure of Mark Miller joining us today. Many of you may have heard Mark on previous In the Trenches presentations. Mark is a partner in our Nashville office within our financial services group. And we're lucky enough to have him join us earlier this year over at Nelson Mullins. So today we're covering You're welcome, Mark. Today we're covering ADA compliance. Our goal today is to cover the basics of ADA coverage, compliance, and best practices. A theme of our webinar series over the past couple of months has been how the pandemic has been shifting our operations online, accelerating the shift to digital banking and online solutions. Part of the risk associated with that shift will be the regulatory and litigation risk associated with ADA compliance. We saw this, when ATMs first rolled out, and then we saw when, online banking first rolled out. And as technology begins or continues to evolve and continues to shift to different solutions or different products, you'll inevitably see the regulators, trying to get around, trying to apply the existing regulations to those new products, to those new services. And you'll see plaintiffs' attorneys, going out, applying the rights of individuals and their access to your products and services to these new products, new services that are rolled out with the new technology. So with that, today's presentation, we're going to cover an overview of the ADA, the application to financial institutions and some best practices, what we commonly see within banks, within non-bank lenders, accessibility obligations, how post-COVID technology could implicate accessibility requirements, that's that shift to the digital space, and what you guys should be doing right now in order to limit these risks and limit the issues that you're going to see in the months and years to come. So with that, I'll shift over to Mark.
All right, thanks, Craig. Well, we thought we'd start with just a basic overview. You can go and hit the next slide, Craig. Of the ADA, and which kind of astonished me when I was putting this together that the ADA is actually 30 years old. It was passed by Congress and signed by the first President Bush in 1990, and when Congress was drafting it, they basically modeled off the Civil Rights Act of 1964. In 91, the DOJ started implementing its regs and put out its accessibility guidelines, and Title III of those regulations address public accommodations and commercial facilities, which obviously is what applies to banking institutions. Since 91, when these regulations came out, there's been updates in 2010 and 2016 being the most recent, which were effective on January 17 of 2017. Next slide. So just again, starting with the basics, go ahead. Yeah, thanks, Craig. Who is an individual with a disability? So the original ADA definition was an individual with a disability is a person who had physical or mental impairment that substantially limits one or more major life activities. So it was including people who had a record of such impairment or who were just regarded as having such impairment. After the ADA was put in place, as you might imagine, there were several court battles as to, how it applied to a certain situation. And, effectively the courts over time somewhat limited how the ADA was being applied. So in 2008, Congress passed another act, basically an amendment to the original ADA that greatly somewhat expanded maybe not the definition, but the treatment of a disabled individual to really include more of a broad coverage and not require some extensive background. So I think, if you will, kind of eliminating the specific individual, is this person truly disabled or not, to just more of a broad, we're going to treat someone disabled who identifies as such or we can identify as such. Then the one thing the ADA has not done, Craig, hit the next slide here, is to put out any type of list that you could just check the boxes, or and here's I'm not going to read this slide obviously, but here's just a big list of traditionally viewed, but again, not defined as such. There are specific exclusions which are listed as well, which my favorite is probably left-handedness, because my father is left-handed, so that makes me chuckle a little bit. And then things that are, just kind of a situational, specific to an individual and how severe something is. But without a list that you can kind of check off, it's, again, a larger, broader definition. And when you're thinking of accommodation, you have to kind of think of a broad spectrum of individuals. I will turn it back over to Craig.
I think one point to raise here, when we see that there is no list of disabilities in the ADA, it's important to note that this is what kind of leaves the door open for plaintiffs' attorneys and the regulators to come in. It's very fact-specific, right? So
exactly.
You can only best prepare the institution or your entity to defend against any allegation of an ADA violation. So you want to be cognizant of what's that first column Mark has up here with the traditionally viewed as recognized impairments and the exclusions. But also have a way to escalate up. Like, you want to see if somebody is claiming a disability, you want to know or be able to showcase that you have, these lines of sight into your operational units that can kind of escalate someone claiming a disability. Like, if someone makes a complaint or a repeated complaint, you want those complaints escalated. You want to see those in your legal or compliance department or your senior management to see those if they're claiming they don't have access or they're claiming they have a disability. Once you have that, we'll talk about this more as we go through the slides, but that is where you would traditionally start to discuss if this disability is impacting, the wider population of your customer base, or if it's, tailored enough or outside that traditionally viewed list where it's going to be maybe this one or very few people within your borrowing population. And that's going to kind of dictate and drive the accommodations that you're willing to make for this individual if it's, a high expense or high cost implementation. That should be part of the balancing act as well. If the disability that they're claiming, to grant access or to accommodate that disability would be a very low bar for you, you want to make sure that you are capturing those opportunities as well. If you learn about disability and the change or the remediation to your policies or procedures or remediation to your physical access would be such a low bar that it was easily makeable for you. You want to make sure you're taking advantage of that.
Yeah, and Craig, let me jump in for a second. I think, when the ADA was passed in 1990, you had, issues of I think we're going to get to this, but like physical barriers and pure construction issues, and there was a line of cases about, what had to be modified or not modified. Well, obviously, with the passage of time, I don't want to say those issues are simplified, but, if you're building a new branch today, you're going to make it ADA accessible, and it's not even a question. And I think as, technology starts evolving, again, things that are questionable now will become commonplace. But to your point, I think the better system you have in place, better policies you have in place that are obviously being followed to address, the evolving technology changes and individual needs of someone, to at least show you're prepared and trying to escalate properly is key.
Totally agree. And that would also include not just your own, like I use the example of your customer complaint program internally, but that should also include, any vendors or third-party service providers that you're leveraging. As you roll out new technology, as you roll out new products where you may be relying on, partnerships, fintech partnerships that we've covered in the past weeks here and in the trenches, you want the ability to have a line of sight into the people that are interacting with those partners and third-party service providers. You want to know what the customer experience is, and you want to know more about the problems and the successes there in order to, remediate a host of issues. But specifically in this space, we want to remediate any access or barring from access that would be a violation of ADA. And you need to do that not only internally, but with your partners, with your third-party service providers, and should be a kind of a core principle within your third-party oversight program. So with that, we want to start shift over a little bit to places of public accommodation and kind of give a little bit of background of how this starts to, or how this applies to banks in general. So places of public accommodation cannot deny people with disabilities full and equal enjoyment of the goods, services, facilities, privileges, advantages, or accommodations of that public place. So we see here a little chart of, what is considered a place of public accommodation. And banks have been determined by the Department of Justice to be service establishments under this reg scheme. So we are covered. Anybody offering the equivalent services of a bank or a non-bank lender is going to be under the same scheme. It's going to be viewed as a service establishment. So what does that mean? Particularly in the line of thinking that we're discussing today, it's going to be applied to your online services as a bank or a lender or a non-bank lender. So you want to see what that looks like. So going back to 2010, we saw the DOJ issue 2 rulemaking actions indicating that it would pass regulations relating to online accessibility, website accessibility, and applied to places of public accommodation, so meaning applied to banks for our purposes. However, they abandoned this effort, and it was never realized. The DOJ withdrew it in December of 2007 after the administration change. Then, surprisingly, in September 2018, the DOJ reaffirmed its belief that ADA extends to websites and online content through a letter to Congress that they issued. Within this letter, the DOJ concluded that the absence of specific regulation does not necessarily serve as a basis for noncompliance with the ADA requirements. So now we're left in this kind of gray area where we know the DOJ knows that the ADA applies to online services and digital solutions. We know that it's governing banks, but we don't have any direction on how to be compliant. We don't have any direction as to like a bright line test as to what can be deployed to limit or exterminate any regulatory litigation risk there. So we have to argue everything on the merits of the facts within each individual complaint or each individual allegation of a violation. Mark, just back over to you.
So now we'll switch a little bit to kind of specific application individuals. And as I said before, it was the Title III regulations that were applicable, and it has some core principles. One is the denial of participation. The ADA prohibits any discriminatory denial of services or benefits to individuals with disabilities. And again, you can see where that would apply to, something like an ATM, something like, an online banking, or something simple like the ability to, review loan documents before signing them. Second, equality and participation and benefits. The ADA mandates an equal opportunity for individuals to participate in or benefit from the goods or service offered by a business. It doesn't guarantee that the individual must receive the identical result, but they have to have the same opportunity to receive those goods and services as a person without disability. The third item is auxiliary aids. Public accommodations required to provide auxiliary aids and services that are necessary to ensure equal access to goods, services, et cetera, unless it would result in undue burden or fundamental alteration that would result from the accommodation. So you can think of things, maybe the most easy example is like a seeing eye dog, and most places that say no pets allowed allow service animals for that very reason. In a banking setting, it could very well be something as simple as, the ability for loan documents to be viewed on a screen where a person who has a sight issue is able to use I think it's called a screen enhancer, where they're able to view the document as I might be able to do looking at a piece of paper. The third or fourth item, I should say, is the removal of barriers. And this is the kind of typical, you can think of the architectural barriers, i.e. putting in a ramp or putting, a larger door to accommodate a wheelchair, but as well as communication barriers, which goes back to, the application to an online setting where, an individual is communicating that way, or something as simple as, the telephone service where, a hard of hearing individual would be able to use a TTY or other text function. And then finally is the maintenance of the accessible features. If you have these features in place, you have to make sure that they are properly maintained and workable on a reasonable basis. Go ahead to the next slide, Craig. So kind of following along with that, you cannot deny an individual with disabilities the equal opportunity to participate and benefit from programs and services. As I said, you have to have the opportunity to be as equal and as effective for folks with disabilities as anybody else. However, you don't have to provide an extra opportunity, if you will. And I'll use the idea of a loan document. You have to make the documents available in a way that the person with a disability can access them and study them. It doesn't mean you have to grant them a loan if they're otherwise not qualified. There are, in the line of accommodations, you can provide additional service or benefit to a person with disability that's not generally given to other folks. However, again, it doesn't mean that you provide an extra benefit or an extra, positive result. And you can't require an individual with disability to take you up on that offer, if you will. It's, they have the option whether they want to use that additional service or not. I think we'll go into a little more detail on that, and Craig, I'll flip it back to you.
Thanks, Mark. So the next couple of slides, we want to go over some of the accommodations that can be made. For example, here we're talking about auxiliary aids and effective communication. It covers people who have vision, hearing, or speech disabilities, and it covers different ways for them to communicate. For example, people that are blind may give and receive information audibly rather than in writing, and people who are deaf may give and receive information through writing or sign language rather than through speech. This does create an issue with your compliance controls here. If you're deploying these aids, you have to make sure your controls are effectively applied to the aids as well. So if you have somebody that may be translating from into sign language, how do you know what that sign language person, the sign language that person is communicating through is covering the metrics that are covered by whatever loan product you're disclosing, or whatever timelines you're conveying, or rates you're conveying to the individuals. You want to make sure that the controls that you're putting out there are also applicable. And this should all be within your reasonable accommodation discussion, like what the cost of that would be, how it's deployed, how many people will take advantage of this, and then also what you're covering. So on the right here, we have some examples. So here, Heather is an individual who's deaf, is visiting a bank branch to catch a check. Exchanging written notes back and forth with a teller would probably be fine. It's adequate, ensures effective communication in that particular instance. But then the same person comes in the next day looking for a mortgage. The preliminary information could be exchanged with the loan officer. But like how you can't use that method of remediation, or the note can't be an effective auxiliary aid when it comes to mortgage origination. There's just too much trying to be conveyed, and you won't be able to monitor that. You don't know what's being said if you pass notes back and forth. The loan officer could very easily be saying, "Don't worry about that clause," or "Don't worry about this. Well, I'm not going to explain to you. It's fine," and then giving disclosures that do not mirror what was being communicated through that auxiliary format. Next here we have, go ahead, Mark.
Craig, I was going to say, I think the point there is, the accommodation that's provided needs to be, really appropriate for the situation. Something simple, okay, it can be a simple, as in the case of, passing a note back and forth, but I think there needs to be an awareness as to the complexity of the matter, as to how much accommodation needs to be provided so that the individual, again, is as a non-disabled person would have.
Exactly. Totally agree. Next, we have text relay services. So here, the ADA established a free telephone relay network to enable individuals to communicate with businesses and vice versa. When a person using this device calls a relay service by dialing 711, an assistant calls the business and voices the caller's typed messages and then types the business response back to the caller. Staff who answer the phone must accept and treat relay calls just like any other calls. A communications assistant will explain how the system works if necessary if the individual on your entity's end has never done it before or is unfamiliar with it. But here's another opportunity to make sure that you're compliant in your policies and procedures. If in your call centers or if you're scaling, you're going to start to see more of this use in TTY, and you want to make sure it's addressed in your procedures or in your training, so there aren't any instances where you have an individual employee that's never seen this before, never heard it before, and refuses to take the call, or thinks that this is not the way they can conduct business. And I've seen this play out. The larger the bank gets, or the larger the entity gets, the more of these instances come up. And you'll see these complaints spiral out of control. Maybe somebody has like a loss mitigation deadline that they're trying to adhere to, or a payoff deadline, and they call into your call center or your business on the last day, or right before the deadline, or whatever deadline we're talking about approaches, and they're using a TTY service, and your employee is unaware of how that works, or have never run into it, is unaware of any training around it, it's not in your procedures, and that individual then misses that deadline, whatever it may be. It could be, I've seen it in foreclosure instances and loss mitigation approvals, where by the time that missed opportunity between your call center and the borrower is escalated, that problem can spiral out of control. They can have gone to a regulator, they could have gone to a plaintiff's attorney, and depending on what was missed, it seems like it wouldn't be a big deal. They would just call back and another person might get it. But number one, those instances can cause really large-scale ramifications. And number two, you don't want that happening again and again. If it's not addressed in your policies and procedures, if that individual's next call is to one of your regulators or to a plaintiff's attorney, if this is happening, even in a small scale, but you're growing and it's starting to multiply in the number of instances that it's occurring, you may not be aware of it until you have a larger scale in your problem. You don't want to learn about it first time through a class action lawsuit. We also have alternative text formats. Here the rules are very flexible again for communicating effectively with customers who are blind or have low vision. For simple transaction, having staff read information to that individual may be appropriate, just like we discussed a couple slides ago, but subject to privacy restrictions, such as avoiding speaking at open teller lines, or being in an area where it can be overheard. And then again, same thing here in more complex transactions where a significant amount of data is communicated through the printed information. Providing alternative formats outside of, just as we said before, just passing notes or alternative text formats, it's going to become more necessary, unless doing so is an undue burden on the business. And this is where, again, your internal discussions have to be documented so you can defend against the claim. If you've never run into this before, you're not going to just proactively, without anyone claiming that they have restricted access or the disability is preventing them from originating the product. If you've never been told about it thus far, you're not going to dedicate the immense amount of resources to translate something in a very complex transaction in a manner that no one may ever wind up using. But you have to have means in place to understand when somebody starts to come into your institution that may want a product or may want a service and does not have it. If you're not aware of those people's restricted access, then your liability starts to grow. If you have the controls to make you aware and just no one is saying they have experienced restricted access, it's a different situation. Once you're made aware, you have to have a balancing test of what the burden is upon the business versus the benefit of the individual who's claiming lack of access. Here again on the right we have another example. When a client is blind, visits the bank to obtain a mortgage, all relevant documents should be provided in a format that the client can use, such as a computer disk or audio cassette. It may be effective to email an electronic version of the documents so the client can use his or her screen reading technology to read them before making a decision or signing a contract. Again, because in this situation there's complex financial information involved, simply reading the documents will not be effective. But again, there, it kind of dictates the amount of resources that it'll take to have those remediation tools or alternative method available. It's kind of great. And you want to balance that with the need.
Yeah, and the other comment that's on that slide, Craig, that I want to highlight a little bit is, I think usually the disabled customer will probably tell you what will work best for him or her. But if they don't, it's appropriate to ask, and I think that's probably something that needs to be communicated in your policy, because a lot of folks might not be comfortable asking that question, but I think it's appropriate, and it should be a step your loan officer might need to consider and think about if they don't know how to best serve the individual's needs. You can hit the next slide, Craig. So we talked a little bit about public accommodations, and part of it is removing barriers. And again, I go back to, I think we all have the concept of the removal of an architectural barrier. That's easy to conceptualize. That's again, the ramps, the larger access, the wider parking spots, all of those things that I think are fairly commonplace at this point, and everyone has a reference to. But equally, you have to remove communication barriers as part of the public accommodation. And the bright line is readily achievable. Is it readily achievable to remove the barrier? And what that typically means is it easily accomplished without much difficulty or expense? There's a couple comments I want to make on that. I mean, first of all, the larger your business, the more resources that a business has, the more resources the business is going to be expected to expend to remove these barriers. Secondly, again, as time has progressed, when you talked about 30 years ago, 25 years ago, making architectural changes to a building to provide access, there was some heavy cost involved, and there was I think a question of whether something was with difficulty or was the expense undue. When you're talking, kind of fast forward to present, modifying, access on your website or something like that, the expense factor really kind of goes down in terms of pure expense, and then measuring, is the expense worth, reducing that undue burden? And I think, again, that's where, we've seen some court challenge, and I think we'll see some more, but there are, I think, lower cost options to, remedy a problem with someone's website that if you take on the front end, you've probably met that test and will be, very helpful on the back end, if you will. Craig can go to the next one. Back in 2010, the ADA put out its standards for accessible design, and they've identified some priorities in considering the removal of access barriers. And I'll just list them out. It's providing access to your business from public sidewalks, parking areas, public transportation, providing access to goods and services that your business offers, providing access to public restrooms, and removing barriers to other amenities that are offered to the public, such as a drinking fountain. And I'll highlight the second one of those because that's where I think we see this being very applicable as technology is more heavily used in the provision of banking services. It's I guess, to be blunt, it's not enough to have your branch easily accessible. It's not enough to have your ATM easily accessible. It's having your online web banking, your browser, your mobile banking apps as accessible for a disabled person as for a non-disabled person.
It's a good point, Mark. And I think part of again, the theme or the point that we'd most like you to walk away with from today's presentation is that it's a little bit more easy when you contemplate ADA issues in the physical spaces of your branch or your ATM locations, and we're kind of used to seeing it that way. When these new technologies are rolling out, whether your mobile apps or your online offerings, clients tend to think of that as an advancement for the individual borrowers or your consumer base, and they don't necessarily think to apply these bright line standards that are traditionally found in brick and mortar branches. But you're going to want to see these same coverages thought of and applied in product rollout and product design. your compliance teams and your risk team should be, questioning that. Your legal team should be asking, what the liabilities are there. And if they're not, you have to start to. And that's the second catch should be, your complaint programs and your escalation points. But your first line of defense here is the design and rollout of these upgraded solutions.
Yeah, Craig, and I guess two comments on that. One, again, to remediate a website that is not accessible is not the expense of remediating a branch building, right? I mean, there's no reconstruction, there's no tearing out X, Y, or Z. But even more importantly, what we're generally talking about is new technology, new products, new routes of access. So you have the ability to build these features in on the front end, and I think it's just an awareness to consider that when you are upgrading your app or upgrading your website or whatever the case may be.
Exactly. Totally agree. And next, we have maintenance of accessible features. We see this a lot with banks and clients that have branches or brick and mortar locations. They will have contemplated maybe on the front end the facilities that were required to have access for individuals with disabilities, whether it be a ramp or whatever accommodation was made in the design of the location. However, if you're remote or you have a very low population of consumers that are actually utilizing the brick and mortar spaces, you start to see clients neglect these accessible routes. You'll start to see people put FedEx drop boxes on the ramps, or the ramp is there with that width for a specific reason to accommodate a wheelchair through the ADA standards, and then you'll start to see people within the branch say, oh, we have some space, no one ever uses that ramp, let's put this here, thinking that someone could just walk by. The problem is you can't use your wheelchair as you go by that. And this becomes an issue because you're required to keep all accessible features maintained. You can have them down for a little bit for temporary interruptions due to maintenance or repair of the features. That's not prohibited, but blocking, putting obstacles up there such as furniture or internally in like a filing cabinet or plants, that all is in violation of the ADA. Now, that seems very logical when you're applying it again to brick and mortar or physical locations, but this same theory is going to apply to your digital access and your mobile apps, your online offerings. Just as Mark and I were, discussing the product rollouts and what you do, as you may be contemplating accessibility efforts there or alternative means of communication through the app there. But as we all know, the technology evolves very quickly. You'll be on version 2, version 3, version 4. You want to make sure that maintenance is always considered for these accessible features. So like if you had a solution for a disabled borrower in your version 1 of whatever the online or digital product was, if you're not maintaining that through iterations of the technology, through different versions of the technology, it's going to be the same principle of putting up the filing cabinet or neglecting the access routes to somebody with a disability that no longer has access to your branch. It's a little bit more difficult here because if you're not thinking of it at the time, you can't physically see it until someone complains about it, but it would be an immediate violation because you just didn't update the accessibility for disabled borrower through that channel. Here is effective communication. So businesses here must take steps to provide auxiliary aids or services when necessary to communicate effectively with customers with vision, hearing, or speech disabilities. This obligation to communicate effectively with people who have disability applies to the presentation and exchange of information in all forms, including sound, print, graphics, and voice. This is not just, again, in the physical sense. This is to your online offerings. Like if someone has the ability to go on and pull a account statement or two, 3 years of account statements from their online banking portal, can somebody who is blind pull those same statements? Do you have translation services that will communicate those statements or have access to the statements? And these suits have been brought. I have a lot of smaller banks who think we're kidding sometimes when we say, the blinds accessibility to your website. There is a host of plaintiffs firms who have brought these accessible alleged violations to banks, and it's not something you want to experience if you haven't yet. So you want to contemplate these issues earlier than later. You want to make sure you have a defense, or the accommodations that you made thus far were reasonable to your borrowing population. And then we also have a note that a specific communication aid or method would not be undue burden or fundamental altercation. A business must provide an effective alternative if there is one. Again, here you have to discuss this. If you cannot provide that alternative means of communication, is there any other effective channel that you could deploy? If there isn't one, what were the processes that you went to arrive at that conclusion? You want to make sure that you've contemplated all methods out there, and just in case you are litigated against. If a suit is brought or a regulator raises the question, you want to make sure you have some weapons in your arsenal to defend against those. And these kind of discussions and contemplation is what you would use to do so.
Yeah, I think the point there, Craig, is if, you're not making the accommodation, you better have some documentation as to the decision process as to why the accommodation was not made, that the benefit was measured against the expense, that the burden was too heavy, et cetera. But as I often say, if it's not documented somewhere, it's as if it didn't happen. And whether it's an arsenal and defense against a plaintiff suit or, a question from your regulator, I think you want something to point to that is both the policy that was in place, the procedure that was followed, and ultimately, some documentation of the decision that was made if the decision was not to provide the accommodation. And with that, we'll kind of start to close here a little bit, but talking, as we've kind of touched on throughout, the past 40 minutes, how do these principles of accessibility relate to technology, and sort of tying into, as we said, the greater deployment of technology, especially sort of in this COVID world in which we live, where you can read the stats, numbers of online banking transactions and interactions have skyrocketed with folks no longer wanting to go into a branch, et cetera. So starting with the basic principle that the Department of Justice has consistently stated that accessibility obligations to reach goods and services, includes websites. And, if it includes websites, I think it's a pretty easy extension to say that would, include any type of, access to an online account or content through a mobile device. So whether it's, purely, an app or whatever else, but, for true mobile banking, that's going to apply to that as well. As we mentioned, the DOJ never issued regulations governing website accessibility, but they've just sort of followed the access under Title II of the ADA, which relates to government facilities. So again, without those strict guidelines, as Craig kind of hinted at earlier, it really does leave the world wide open for plaintiffs' attorneys to kind of chip away at every other iteration, and unfortunately, it doesn't allow an institution to have any type of safe harbor that says, hey, we did X, therefore, pursuant to a regulation, we should be okay, we should be free of liability, which goes back to what we just said, is you have to have well-established policies and procedures in place and decisions documented. That becomes your defense. So, for now, unfortunately, the ADA's application to websites, and again, we think mobile apps will be tied right in there. It is being tested on a case-by-case basis, and you have various decisions, coming from different districts, et cetera. But it seems to be pretty clear that the ADA, is fully applicable to a website because, again, it's measuring the access for the disabled individual as a public accommodation and what burden is there for making it inaccessible. And the finding of the courts have been that the websites need to be accessible. So what guidance is there? Craig, you go ahead and hit the next slide. And again, unfortunately, there's nothing from the DOJ specifically. There's this consortium called the World Wide Web Consortium, which by the name you can tell it dates back to the 1990s. But they've issued their website content accessibility guidelines. I believe it goes by the name of WCAG, and it's just standards. And there's you can see on the slide, it's 2.0, 2.1, and there's a new one in the works that was supposed to be released later this year, but due to COVID-19, it'll probably be released next year. And it's just ever increasing standards, and kind of guidance that we would give is you probably want to be as current as possible, because once the new standard comes out, you'll likely be outdated. There's also standards for folks who do government contracts and other interaction with the government. But what are the principles of the WCAG? It's the, quote, P.O.U.R principles. Content must be perceivable. The interface must be operable. The content and the controls to access the content must be understandable. And the content must be robust enough to work with current and future technologies. And, again, that's where you see, something like a website where it needs to have accessibility for, individuals with varying disabilities. One example might be on your website if you have, a picture of maybe a person, handing, a check to a teller. Well, that picture would have some sort of an underlining code in it that would show up if the website was being, translated audibly for a person who was blind, that would literally say, picture of customer handing teller check. And it's just things like that you can build into your website that allow it to be more accessible. And again, if you do it on the front end, you're going to avoid, I think, some litigation. And there are various service providers, probably, I'm guessing, maybe even with your core providers, that can provide that type of consulting and code writing for your website to make it compliant.
And one thing that Mark touched upon here that I think we should expand upon is the fact that the DOJ has not adopted one of these standards or not adopted some of the metrics within some of these standards as a bright line test has really made it difficult to become compliant individually within the financial services space. Those standards that are 2.0 and 2.1 and that 10 years in between, to become 100% compliant under that second standard in 2018, depending on the size of your institution, can become wildly expensive. Like if you're providing alternative means of communication for millions of PDF documents that your various consumer base has access to, and recoding, every page and subpage of your online content or your app, your phone app, it can be in the millions of dollars for for an institution that may not have any complaints for accessibility issues. But that said, you have plaintiff's attorney out there, scanning websites, scanning apps for, those that aren't as compliant as, the average across the space or the average across the asset size, and just filing suit. They'll go out and, have a prospective borrower view your web page. And even if you don't have a borrower that is, complaining about accessibility, if your prospective borrowers don't have the ability to, open an online account because of a disability, that's going to form the same liability under the ADA standard. So the lack of DOJ guidance here is really leaving banks with the decision, do we spend indiscriminately to become 100% compliant in order to minimize the possible risk as much as possible, or what is that risk threshold that we're willing to live with keeping the costs in line?
Yeah, and let me just jump in for a second, Craig. I want to just amplify the one point you made, which, is unfortunate, right? I mean, your comment about plaintiff's attorneys just, being able to, easily search websites. If you think about it, as ADA litigation has progressed, it used to be you'd have to go to a physical building and see what type of accommodations they had, and then obviously a number of banks around the country were hit with what we call these quote ATM lawsuits. Well, again, it was a plaintiff's attorney finding an individual to go to a bank or a bank's ATM physically at that location. That takes time, that takes money. To sit at someone's desk and just surf bank websites, that can happen pretty efficiently, and unfortunately that just really expands the spectrum of targets that the plaintiff's firms can go after. So it's as you're reaching a wider potential base of customers, it is opening up to a wider target, unfortunately.
Agreed. We do want to leave some time for some Q&A because a lot of these, standards are living in a gray area. So if you do have any questions, I just want to remind everybody that question dialog box is on your GoToWebinar screen. Or if you have any questions for Mark and I after the webinar, please forward them over to us. But we do want to touch upon some examples of the accommodations within these standards. So we have them bullet pointed here. Someone who cannot hear well will want a visual representation of the information presented via sound. Someone who cannot see well will want to hear or feel via braille or tactile graphics an equivalent of the visual information seen. Someone who does not have the strength to move quickly or easily will want to use as little movement as possible and have as much time as they need when operating web interfaces. Someone who does not read well may want to hear the information read aloud for them. So these are some of the questions that you should be asking yourself as you're going through that web design. And a lot of the times, you might not have a compliance executive or a risk executive or a legal executive on the calls with the digital teams that are building these out. We most of the time look at those controls as applying to the disclosures, applying to the language that's being presented, but not the medium of which the language is being communicated. And that does apply within this digital space. So you want to make sure that these questions are being asked at the earliest possibility, the earliest possibility within the creation cycle. Mark had addressed the P.O.U.R guidelines 1 or 2 slides ago. Here we expanded on them. Perceivable information and user interface, what that means, text alternatives for non-text content, captions and other alternatives for multimedia content. The content can be presented in different ways. Content is easier to see and hear. Operable user interface and navigation, what does that mean? The functionality is available from a keyboard. Users have enough time to read and use the content. Content does not cause seizures and physical reactions. Depending on how your marketing program is, you want to make sure that that's not an issue. Users can easily navigate, find content, determine where they are. Users can use different input modalities beyond a keyboard. So is there voice recognition available? Is there different alternatives to just the use of a visual keyboard? Second or third, metric clear, understandable information and user interface. The text is readable and understandable. Content appears and operates in a predictable manner. Users are helped to avoid and correct mistakes. And finally, the robust content and reliable interpretation. Content is compatible with current and future user tools. We kind of touched upon this with the different versions of your mobile app when talking about it in relation to putting that FedEx box on the handicap accessible ramp. Same thing here. You want to make sure that this content or any alternative communication of the content is compatible with the future user tools that you're planning to roll out. Your version 1 app on your consumer's iPhone is going to look extremely different in 2 years when you're at version 25. You want to make sure that these P.O.U.R guidelines were contemplated with that evolution of the solution contemplated.
Yeah, I think the other item there, Craig, is having your website, your app, compatible with the tools that a disabled person would use to access that, be it a reading screen for a blind individual. That your website needs to be able to translate to that technology. Likewise, if it was a text to audio for someone, then that would need to be, the coding in the website would need to be able to be translated to an audible setting and not have just blanks where there's login boxes or things like that.
Yeah, agreed. Up here we have the 2.0 guideline levels. These levels increase in the level of compliance, with A being the lowest level of compliance and AAA being the most robust. Again, we want to reiterate the DOJ did not adopt these standards. They just left it, up to the market. But that said, much of the industry is focusing on the 2.0 AA. 2.1 picks up all of 2.0. So it just gets increasingly more robust. So for example, when looking at audio and video website content, A, captions for pre-recorded video or audio, descriptions provided of all audio and video content. AA, live captions for all live video content. Audio descriptions are provided for all pre-recorded video. And AAA, sign language interpretation of video content, extended audio descriptions when pauses in content are insufficient. And again, they all aggregate. So the more robust you get, they encapsulate the iteration that came before it. Another takeaway here is I don't want to make this sound overwhelming. It is a lot of metrics to contemplate when you're rolling out or you're moving into the digital spaces. You don't have to be 100% fully compliant on day one if you're a smaller institution and dipping your toes into the digital spaces, into the online solutions. You just want to be able to say that you contemplated these issues, just like we always drive home with the compliance management system. The lack of the control or the lack of the access is an alleged violation, but you can remediate that pretty immensely by saying you contemplated it and did not have any evidence that the remediation tool was as necessary. For example, here you may think that AAA is just not going to be applicable to your institution the way your users use the content. You haven't heard anything about this being an issue with your user base once you've gone live. That might be enough to ward off plaintiff's attorney suit or to ward off a regulatory violation if you roll back to the A standard. And I think Mark and I have been trying to drive this home. The only thing that you can't do is you can't do nothing. You can't have not contemplated it. You can't have not thought about it. You can't just pretend it doesn't exist until someone actually complains about it. You need to have rolled this out somewhere within your control, somewhere in your oversight. You've thought about this in the creation of the content, creation of the solution and channel, and continue to apply it as you make advancements and become more sophisticated. Finally, we just wanted to highlight. I feel like a lot of times we end on the wrong slide. This might be one of them. The continued lawsuit focus. You can see the volume of the lawsuits to the right here. We pulled from a J.D. Super article. In 2013, we only had 2,700 or so. In 2018, we were projected, or I think we wound up with a little under 10,000. And it's just going to continue to go in that direction as the options, continue to expand. The more digital solutions you have, the more channels your institution creates for access to consumers. It creates a better customer experience, and it creates a greater chance for you to reach a wider audience and to drive that organic growth. But at the same time, you're increasing your opportunities to become non-ADA compliant. So you kind of want to balance that and be aware, because there are plaintiffs' attorneys out there that are aware of that, and their whole business model is based off of that. Mark, anything else to add?
Yeah, no, I mean, I think it's, again, we're not trying to scare folks, but the targets are out there and the numbers kind of prove it, I just want to kind of echo your thoughts, Craig, that, even if you decide to do nothing, it needs to be part of a plan and a measured decision, because, you want to have some defense, for lack of a better word, and I think that defense is to have a documented decision, to have a compliance plan, and to follow it. So I'll end on that and turn it back to you.
Yeah. So again, thank you for joining us for this week's In the Trenches. We'll be back on September 10th. We believe we're covering minority depository institutions, CDFIs, and the applicability of ACOA to both. If you have any questions about today's presentation, again, please feel free to use that question portal in the GoToWebinar, or email myself, Mark, or anybody on our team. I have the names up there and they're in the slides. And you'll be receiving this deck just as you always do for attendance in today. And thank you very much.
All right, thank you.